All right. So I'm going to try to give a very simple explanation of GST bill and talk about the reasons why BJP and, in fact, a lot of UPA states, a lot of Congress-ruled states opposed the GST bill proposed by UPA for 10 years. So why was UPA unsuccessful for 10 years and NDA, BJP, got it passed in 2 years? I'll give you the lowdown of the whole thing. Okay. So first, what is GST bill? Before we talk about what GST bill is, let's talk about what is not GST bill. So non-GST bill, tax on tax regime. What is that? So to give you an example, let's imagine there is a raw material supplier in Rajasthan, a manufacturer in Gujarat, a wholesaler in Maharashtra, and a retailer in Karnataka. Okay. So say suppose the raw material supplier has the raw material worth 100 rupees for one shirt. He sells that raw material for 100 rupees of 100 rupees to the manufacturer in Gujarat. He adds 10% tax to it. So now 10% of 100 is 10 rupees. So now the cost of the shirt when he sells it to the manufacturer in Gujarat is 110 rupees. So the manufacturer in Gujarat pays him 110 rupees. The raw material company takes the 100 rupees, puts it in his pocket, takes the 10 rupees that the manufacturer paid him, and then gives it to the government of Rajasthan. Now, the manufacturer in Gujarat manufactures the shirt, and the cost of manufacturing, suppose, these are all just round numbers just to make it easy. The cost of manufacturing that one shirt is, say, $40, which includes the profit of the manufacturing company and everything. So now the cost of the shirt is 110 plus 40, which is 150. Now, before the manufacturer sells that shirt to the wholesaler, he has to add 10% tax to it. So now he adds 10% tax to 150. 150, 10% of 150 is 15 rupees. So 150 plus 15 is 165. So now he sells that shirt for 165 rupees to the wholesaler in Maharashtra. Wholesaler pays the manufacturer 165 rupees. The manufacturer takes 150 rupees from that, puts it in his pocket, and takes the 15 rupees from that and pays it to the state government of Gujarat as a tax. Now, the wholesaler takes the 165, the shirt that he got for 165 rupees and adds $40 to it. Suppose $40 is his profit and expense, including all that. So all that makes 40 rupees. So he adds 40 rupees to the 165, which was how much he got the shirt from the wholesaler, from the manufacturer. So now the wholesaler cost of the shirt is 205 rupees. Now, before the wholesaler sells the shirt to the retailer, he has to add tax, 10%. Suppose, this is just round numbers again. So now the tax on 205 is 20.5 rupees. So he adds that tax of 20.5 rupees to the 205 rupees and sells the shirt for 225.5 rupees to the retailer. The retailer pays him 225 rupees. The wholesaler then takes the 205 rupees, puts it in his pocket, and takes the 20.5 rupees and gives it to his government of Maharashtra, as a tax. Now, the retailer takes the 225.5 rupees shirt and adds his own value to it, his profit and the expense that he has to incur to put it in his shop, and let's say all that value is 40 rupees. So now for him, the cost of the shirt is 265.5 rupees. To that, he too has to add 10% tax. So 10% of 265.5 is 26.5, rounding it up, of 26.55, whatever. Let's round it up to 26.5. All right. So he adds that tax, 26.5, to the cost to his cost of the shirt, which is 265.5, and now he's ready to sell that shirt to a customer for roughly 292. The customer then buys the shirt for 292. The retailer then takes 26.5 of that money, gives it to the government as a tax, government of Karnataka, as a tax and keeps it 265.5 in his own pocket. So now in this scenario, all the state governments received tax money from each level. And the customer got the shirt for 292. The problem in this scenario is that along with the tax was calculated not just on the value of the goods and on the profit, but it was also calculated on the tax that was added to it. So it was tax on top of the tax, meaning when the raw material company sold the shirt to the manufacturer for 110 rupees, the manufacturer added 40 rupees of his profit plus cost to that 110. So now the cost of shirt to him is 150 rupees. But in that 150 rupees is also the 10 rupees of the tax. Okay, so it's 100 rupees for the cost of the material, 40 rupees for the profit for the manufacturer, and on top of that, there is that 10 rupees. So when the manufacturer is ready to sell that shirt to the wholesaler, he adds all that up. He's also adding that 10 rupees of the tax, and whatever the addition comes up to, which is 150 rupees, he has to pay tax on 10% of 150, which is 15 rupees. So now even that 10 rupees that he had to pay earlier to the raw material provider, which was for the tax, there was a tax applied on it. So at every stage, the price of a product keep on increasing because the tax is added at every stage to the total price of the shirt. And so the tax keep on increasing by how much everyone has to pay the tax. So tax doesn't keep on increasing just by the values added to the product at each stage, but because at each stage everyone has to pay a tax, that tax is also added up in the price of the shirt. And then at every level, every person has to calculate a tax with that total sum. So it ends up to be tax on tax. So by the time the retailer is ready to sell his shirt, there are already four level of taxes already added in the price of the shirt. And on top of that, he has to calculate the tax before he pays it to the customer. So there are multiple tax which no one has. It's just that amount is just added to the price of the shirt, and no one is making any profit out of it. It's just tax money added to it. All right. So now, what is a GST? How does a GST bill, GST regime work? So under GST regime, say the same example. Say the raw material company sells the shirt for 100 rupees shirt, 10% of tax. So he sells the shirt for 110 rupees. Okay. Now, the manufacturer buys the shirt by paying 110 rupees. He paid 100 rupees for the shirt material and then 10 rupees for the tax. Right? Now, the material manufacturer takes the 100 rupees for the material, puts it in his pocket, takes the 10 rupees of the tax, and then gives it to his government, in this case, government of Rajasthan, just like in the previous case. But in GST example, now the manufacturer who has paid the 10 rupees of tax to the raw material company for getting that shirt can now claim that 10 rupees back from the government of Rajasthan as a tax credit because he has paid. So now government of Rajasthan that has taken the 10 rupees from the raw material company gives that 10 rupees back to the company, the manufacturer. So now the total cost of the shirt, the raw material that the manufacturing company incurred is only 100 rupees because he got the 10 rupees that he paid in tax back from the government. Same thing happens. Now the manufacturer has added his 40 rupees to it. So now he's going to sell the shirt for 140 rupees. Plus, he will also have to add 10% of tax to it. So now 10% of 140 is 14 rupees. So he adds 14 rupees to the cost of the shirt and sells that shirt to the wholesaler. When he gets that 154 rupees back, he takes the 140, puts it in his pocket, and takes the 14 rupees, gives it to his government, in this case, government of Gujarat. Now, when the wholesaler gets the shirt and he pays the 154 rupees to the manufacturer, he then can claim tax credit and get the 14 rupees that he paid to the manufacturer from the government of Gujarat or where the manufacturer is stated and put it in his pocket. So now he did not end up paying any tax, just the way the manufacturer did not end up paying any tax. And this continues till it goes to the retailer, right? And now say the retailer has, it all adds up to be $180. By the time the shirt comes to the retailer, it ends up to be $180. The retailer then adds 40 rupees of, or 180 rupees, not dollars, 180 rupees at the retailer. So now the retailer adds 40 rupees for his profit and all that. And now the cost of the shirt is 220 rupees. He adds 10% of tax on it. So now the cost of the shirt is, the 10% is 22 rupees. So now the cost of the shirt is 242 rupees. Now this is the entire cost of the shirt that he's ready to sell to the customer. The customer buys the 242 rupees shirt. The retailer then takes 220 out of it, puts it in his pocket, takes the 22 rupees out of it and gives it to his state as tax. In our case, it will be state of Karnataka. Now, in GST, that is the only state that earns the tax money. All the other states where the raw material company is, where the manufacturer is, where the wholesaler is, none of those states receive any money in tax money. Okay? Only where the last retail happens, that state is the only state that receives tax money on the sale of that shirt. What that does is that reduces or prevents taxation on tax, and the final cost of the shirt to the consumer is less. So in case one, where there was no GST, the shirt would end up to be somewhere around 292 rupees. In GST, the shirt would end up to be 242 rupees. So a customer ends up paying less, 50 rupees less, which he would have ended up paying because of tax on tax. So the customer then goes home happy. The last state ends up getting all the tax money. Now, this was the GST bill. This is general GST bill idea. This GST bill was also proposed by UPA. Okay, same GST bill. And it was rejected by Modi ji, by BJP government, or by the states that had BJP government, but most importantly, by more than 5 states that did not have BJP government. Some of the states that rejected the UPA GST bill were Maharashtra, Odisha, Haryana, Tamil Nadu. In fact, the Jammu and Kashmir finance minister, who was serving as the GST Empower Committee chairman, said that most of the states, majority of the states have opposed GST bill. Why? What was wrong in this bill? What were they opposing? And what did they want change in this bill? They want simple change. Now, in GST bill, as I explained, what happens is all the states, especially the states where the manufacturing plant is situated, will lose tax revenue. Only the state where the final sale happens will get tax revenue. All the other states or all the other levels will lose tax money. So if GST bill is incorporated tomorrow, all the states that were earning tax income because they had manufacturing plants in their state, the manufacturing plants were manufacturing products and giving tax to the states, all those states will lose that money. Only the person that is, only the state that is where this final sale happens will make money. And all the states, Maharashtra, Odisha, Haryana, Tamil Nadu, and Gujarat, were earning a lot of money by getting tax on manufacturing goods, and they would lose all that tax money. So they were all opposed to it. They were requesting to change the bill that UPA was proposing. What they were asking for is to allow 1% of tax, not 10% as in the example, or 6% as it would really be in reality. The percentage has not been decided yet, but they would say, allow us to charge our manufacturing companies 1% of tax that we don't have to give back, that we can keep. Okay, so for example, in our example, say the raw material company charges the tax of 10% before it sells it to the manufacturer, and that 10% tax has to be returned back by the state government to the manufacturer. So in the revised GST bill, what the state governments wanted was to charge 11% tax to the raw material company. So now the raw material company is going to sell that shirt for 111 rupees, of which it will take the 100 rupees, put it in pocket, take the 11 rupees, give it to the state. The state would then give 10 rupees back to the manufacturer, who paid 111 rupees to buy that shirt material, and then still keep that 1 rupees with them. And that 1 rupees is what's going to help them ease to the GST regime. Okay. And they also had requested a couple of other changes. And those changes were to keep petroleum and alcohol out of the GST bill, so they can earn revenue from those. So they can put all the products in GST bill, but just allow them to still keep the petroleum and alcohol in the old tax system. And UPA disagreed to it completely, and that's why they were not able to get consensus on GST bill that they had proposed as late as 2013. But NDA agreed to all these deals. NDA said, yes, we will keep petroleum and alcohol out of GST bill. So all the states where manufacturing happens, they can still get some tax income from there. They also said for 2 years, all the states where manufacturing happens, or all the states in India, can levy up to 1% of tax, as I just explained a while back, on all the products that are manufactured or have the raw material or have the raw whole. So they can put that 1% tax on all the states. So it will still be cheaper to the consumer, but it would not be so much of a drastic change for all the states from a non-GST to a GST bill regime. And the other thing that was proposed was by NDA was that the central government will compensate for 5 years in descending order. First year 100, then 75, then 50, and then so on and so on. Will compensate specific amount of money to all those states who are losing money because of no tax revenue. So what the central will do is that the final state that where the retail happens, that receives the actual tax money from the retailer, will then have to split that tax revenue half and half with the center. And the center will then take that revenue and distribute it to the remaining state. This was the Arun Jaitley solution. This was the NDA solution. This was the solution that really brought everyone together and that really made it possible for the GST bill pass. Chidambaram was not ready to make any compromise on the GST bill he had proposed. He was not ready to give the 1% tax levy permission for 2 years only. That's what they wanted, just for 2 years. Then it's going to get flattened out. So he was not ready to make any compromise. NDA was able to make compromise. And after 5 years, the full-fledged GST bill will start, all because eventually things will flatten out, because every state that has a manufacturing facility also has a retail facility. So in this example, the final sale happened in Karnataka, and there will be final sales in Maharashtra happening, final states in sales in Gujarat and Rajasthan, and every sale will of course have retail retail possibilities, and every state will then gradually receive more and more retail money in tax as well. So within 5 years, it will all flatten out. But what NDA government was doing is giving them that gradual transition from non-GST to GST regime. And that's why most of the states got behind. That is the genius of NDA. That is the genius of Arun Jaitley. That is the genius of Narendra Modi, to compromise, to listen to people, and to come up with a common ground.